Welcome back to CryptoByte, everyone. As usual, we try to get you the latest and hottest news. I was gone for quite a while because I was moving out, and since the COVID situation, it's been very hard to get internet running, but we're back. And today, mainly, I'm going to show you 5 on-chain indicators that you as an investor or trader, even as a newcomer, should be looking out. And we're going to be looking at the Bitcoin breakout and how it has performed recently compared to Amazon, Apple, Facebook, S&P 500 and all others. Let's get starting on CoinGecko.com. We've got Bitcoin doing 1.5% upwards in the last 24 hours. It's just hovering around the $13,000 mark. We've got Ethereum 1% up. We've got XRP 1.2%, Bitcoin Cash 1.8%, Chainlink 7%, performing very well the last 7 days, 21% as you can see here. And let's look at the best performing assets in the last 24 hours. Filecoin has recovered, but it has been performing very well, very bad actually in the last 7 days since it has issues with the governance token, but it has been up 24% in the last 24 hours. We've got Ocean Protocol doing 12.7%, Theta Network doing 12%, Ampleforth, we're looking at the market cap. Also a few winners such as Quant, Chainlink and Bitcoin SV. Let's look at the worst performing the last 24 hours. Not much, guys. Today it's more of a green market. We got Digibyte minus 2.9, Bitcoin Diamond, NEM, Kusama, Ren, Terra. Not much. You see, not much today. And this takes me to the main article, which is the on-chain indicators that investors should follow. And there's 5. I follow them each and every day. There's quite a few of them, but these main 5 ones you should definitely look out for. Analyzing cryptocurrency markets may seem easier than traditional markets because blockchain technology has more built-in transparency, enabling anyone to analyze and audit on-chain data. And the first one would be exchange inflows. And the first indicator that I look at every day is exchange flows. I do that each and every day, guys. You should do that same. And if you don't want to pay, you can go to Chain Analysis here, markets.chainanalysis.com. And you can look at the Bitcoin inflows to exchanges. It's not the best, but if you don't want to pay, you can look at that for free. You got also Glassnode where you have to pay on a monthly basis, but it is more in depth. And going back to the article, investors typically transfer coins from their wallets to exchanges when they want to liquidate their holdings and take direct custody of the holdings when they have bullish view on the cryptocurrency. A surge in inflows in a rising market could be considered a sign investors lack confidence in the uptrend. And this is what it is all about, the exchange inflows. It just shows you basically how much has flown in the exchange. Usually people do sell because they like to keep their own wallets, but doesn't necessarily mean it's not 100%. So just because this might be very large doesn't mean that the Bitcoin or the other price of different assets are going to go down straight away, but usually it is within a day. Now we've got trade intensity, and it tells us how many people are willing to buy Bitcoin sent to exchanges. An uptick in trade intensity shows that buyers are outweighing sellers, and it is a sign of trend strength. And this is actually a wrong picture. We will look down here and you can see Bitcoin trade intensity. So it goes up, it goes down, but it was quite high on 21st of October. And what it means is that it compares the value of order book trades to exchange inflows. An increase in trade intensity suggests more market participants want to buy than to sell. So the higher means that people want to buy and the lower means that people want to sell. And let's take you back to the article, and the next one would be inter-exchange flows. And what that does is investors can determine whether the market is driven by fiat buyers, such as institutions, or tether traders, which is the stablecoin, by keeping track of net flows between these two types of exchanges. And the two exchanges are the crypto to fiat exchanges and the crypto to crypto exchanges. So like Binance is a crypto to crypto, but they also have Binance Jersey, let's say crypto to fiat. Coinbase does both. And a big one also would be liquidity. This is very important, and investors can gauge the hodling sentiment in the market by keeping track of the number of liquid and illiquid entities. Essentially, an illiquid entity is one that appears to believe in the cryptocurrency's long-term prospects and hoard coins. Chain analysts have defined a liquid entity to be one that sends on average at least 25% of the assets it receives, while an illiquid entry is one that sends on less than 25% of its received assets. So let's say you receive 1 Bitcoin. If you send less than 0.25 Bitcoins, which is 25% or less, then you are considered illiquid Bitcoin. And if you send more than 0.25%, which is more than 25% of one Bitcoin, as let's say on this example, it means that you are liquid Bitcoin. And let's look at the graph here. We have illiquid Bitcoin going up drastically since January 2020, and we've got the liquid Bitcoin, which is the yellow one, going down more than zero. So this is incredible news. It means that people are holding right now. And even though the prices are quite high, it shows that people anticipate the price to go even further, and they are more in a buying stage. So it is very bullish for Bitcoin. Also, we have value transfers across blockchains. So value transfer refers to the US dollar value to total units on a blockchain that are transferred on a given day. It essentially represents the usage of the blockchain and is accompanied by a rise in the transaction count. So you can see the graph here. The US dollar value on Bitcoin is going slowly up again. Ether had a surge like never before, crazy, almost going to $30 billion per week. And now as the DeFi space is slowly going down and more attention is back on Bitcoin, you can see that the yellow Ether is going down, the orange is slowly going up again, and even Tether is going down. So let's take you to the next piece of article, which is Bitcoin Breakout. We have price just above $13,000 and it is up 80% on the year, and it is outperforming all S&P 500, including Apple, including Amazon, including Facebook, including Google. Let's look at the graph. So here's the graph. Sorry, I had to just zoom it in. So we've got Bitcoin at 80.76%. We've got Amazon on 70% almost, Apple on 57%, Google 34.5%, and Facebook on a mere 20%. And this is reflecting to the rate of return since the start of the year. So we have everything going up, going down as we have the March crash. Then we have Amazon, which is the red one, improving very drastically compared to all others. And we have now Bitcoin finally going above it at 80%. And as you can see, Facebook has just returned 20, 34. That's the top ones on S&P 500 we're speaking about. And just imagine you as a big investor with a lot of money, you go to JPMorgan and you want them to give you advice and basically give you the best bet. You want the best returns, correct? So that Bitcoin has performed the whole S&P 500, even the top 4 or 5 companies. So you as a big investor, you could go back to JPMorgan and say, why do you not trust Bitcoin? It has returned me more than all S&P 500. And slowly JPMorgan and big banks, big wealth managers are gonna be forced to use Bitcoin, forced to buy Bitcoin, and forced to advertise it. That might sound drastic, but this is the reality. This is the reality. Everyone is slowly getting into Bitcoin. We even have Abra's CEO just put 50% of his investment portfolio in Bitcoin. And if you're wondering what Abra is, it's a leading crypto asset exchange that has gained immense traction over recent years. And this is the CEO, Bill Barrett. He's worked for the CIA, I believe. He's worked for something else, the NASA. And he did say that 50% of his investment is in Bitcoin. So this guy slowly got back into Bitcoin. I don't think he believed in it 3 years ago, just like JPMorgan. And this takes me to the JPMorgan news. I know you guys probably have heard about it, but I just wanted to cover it very quickly for the people that haven't. And Bitcoin has proven itself to be a risk asset, not a safe haven, with considerable potential upside, according to a Friday note from JPMorgan's Global Quantitative and Derivative Strategy team obtained by CoinDesk. And they have done a complete 180. They said that Bitcoin was a fraud 3 years ago. Slowly they're getting into it. As I'm saying, they're slowly gonna be forced to cover it, and we are gonna see big wealth management, big smart money coming into Bitcoin. Just quickly looking at the price also on the daily chart. Let's look at the daily chart. We've got Bitcoin just about to touch the 13,200 mark. And I'm not sure if we're gonna go directly up or if we're gonna retest around this area again, 12,000. We could retest even below that. I mean, it is potential. So please make sure you have risk management. And this was it. Thank you very much for listening. And hopefully tomorrow we bring you guys again the latest and hottest news. So I'll see you guys tomorrow. Bye-bye.